General risk disclosure. Trading financial instruments, including forex, futures, equities, commodities, and cryptocurrencies, involves significant risk of loss. Trading is not suitable for all investors, as it may result in the loss of your entire investment. Leverage, volatility, and liquidity risks are inherent in these markets. Before engaging in trading, carefully consider your financial situation, experience level, and risk tolerance. You should only invest money you can afford to lose. Forex and futures disclaimer. Trading in the forex and futures markets is highly speculative and carries a substantial risk of loss. The leverage nature of these instruments amplifies gains and losses, potentially leading to substantial financial exposure. This content complies with CFTC Rule 4.41. CFTC Rule 4.41 disclaimer. Hypothetical or simulated performance results have certain inherent limitations. Unlike an actual performance record, simulated results do not represent actual trading. Also, since the trades have not been executed, the results may have under or overcompensated for the impact, if any, of certain market factors, such as lack of liquidity. Simulated trading programs are also subject to the fact that they are designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profits or losses similar to those shown. Equities and commodities disclaimer. Equity and commodity trading involves risks associated with market volatility, company-specific factors, and geopolitical events. While stocks and commodities may have a lower leverage factor compared to forex or futures, they can still result in substantial financial losses. Cryptocurrency disclaimer. Cryptocurrencies are speculative and highly volatile instruments. Trading cryptocurrencies involves additional risks, including regulatory uncertainties, security vulnerabilities, and lack of liquidity. Cryptocurrencies are not regulated by most governments or central banks, and their value may be affected by external factors such as news events and market sentiment. Regulatory references. In the United States, this content adheres to the regulatory standards of the Commodity Futures Trading Commission, National Futures Association, and Securities and Exchange Commission. In the European Union, trading practices comply with the European Securities and Markets Authority standards. Global compliance, content aligns with internationally accepted guidelines, but laws vary by jurisdiction. Consult with a licensed professional in your area. Past performance disclaimer. Past performance is not indicative of future results. Any historical results or performance shown in this content are for informational purposes only and do not guarantee future performance. Educational content disclaimer. The information provided in this video is for educational and informational purposes only. It is not intended as investment advice, nor should it be construed as a recommendation to buy, sell, or hold any financial instrument. Always consult with a licensed financial advisor or regulatory authority in your jurisdiction before engaging in trading activities.
All right. Well, this environment just reminds me of that song Gangsta Paradise by Coolio. But instead of Gangsta's Paradise, we're living in a scalper's paradise. Because it's definitely not giving us raise before trades. 6, 26, 25. When the last time we got a raid? And the question is, do we want to chase trades? Heavens no. We play the game by our own set of rules. Let me see, because I don't think that's it. I think tomorrow is nothing. Yeah, PCE. PCE is something, but it's not really nothing. It don't give us wild moves like CPI, but it's the Fed's quote unquote metric for raising and hiking rates. So for something that impactful not to move the market, it's crazy. Consumer sentiment at 10 has been giving sales lately. That's a good thing about looking at the news. You can kind of tell by what it is and the trend because you kind of remember or you journal on it. You're like, oh, unemployment's doing good. This should happen, or, you know. 79%. We're not doing anything with this. We're going from this 79 to 80 so much. Let's put less real estate on this. Still no big change to Fed fund rate sentiment. Earnings, I know for sure we don't have nothing on Friday. Let's go to earnings. Yeah, it's almost not even worth the screenshot, but Out of habit, we'll do it. I wonder how Nike did. Nothing too important for NASDAQ. Dollar on the daily. I think dollar's running because I've seen EU just kind of running. Yeah, we closed through this low. We really gapped through it. Yeah, this is over. It was choppy, but it was getting there. Target hit on the dollar. I don't think it's nothing macroeconomic that's gonna. It's like, all right, the dollar go up now. But I'll look into it maybe over the weekend. This move is played on the dollar. I'm not concerned with it as far as hunting setups until next week. We did swoop that previous day high, but we kind of used it to keep going higher. That is a common thing. Where is this? Delete that. Where's the other one? Go here. We almost to that fair swing and old all-time highs just right there. That was the key level we used today. CSD happened at 9 o'clock. This closing price held. Market structure break happened here. We didn't even get a retracement. Key level. So just for this delivery today, pushed up past this from here to here, just broke out. Okay, one side of the day, target is hit. No pullback or CSD after we took previous day high. Instead, we used that high as support for higher prices. My target was 50% of that gap, but that gap got smacked. Let's go to the weekly chart, see what we took. We took this inefficiency. We only have this high left next before all-time high. Hmm, we took the weekly volume imbalance. Next weekly level is old week high at 22,739. Think we get down to Friday or we TGIF? I think that's the question. People want a TGIF, but it don't look like it want to give nobody a TGIF. We didn't even get no bounce here. We just bounced up to me this high. We're just closing. Bump a TGIF. We need the whole stop line, but we got this here with market open. They said that's good enough. Monday, Tuesday, Wednesday, Thursday. Crazy. One side of delivery. We're going to new all-time highs. What is going to stop it? I can keep this here. This can stay here. This is good for the screenshot too, just so we can have those notes. How we came. Swept both ways. This was enough. H4, you can kind of see that 5 o'clock candle did the damage. So 1, 5, 9. Beautiful. We almost to the extensions too. Oh, all-time highs right there. Low hanging fruit is this 7, 22, 17, 18, which is, what is that on the daily? It's a fair swing. Yeah. $22, 7, 718, 15. No, 75. 22, 718, 75. 22, 718.75 is my objective. A whole daily fair swing. Let's go here. Completely fill this gap. We can take this gap off. This is that volume imbalance. I mean, as far as like where would I want to buy here, it would have to be here. At the bare minimum to start hunting for buys to target here. I would have to buy a retracement. Will it invalidate everything and say this delivery is bearish? We would have to close below the last stop hunt. that would be the only two setups I give myself. $22 $718 $75. 22 718 75. It's my low hanging fruit objective. Large set for buys at H1 order block. Oh snap! At OB and no sales permitted unless we close through H1 stop hunt. All right, that's that on that. Do. All right, y'all. Y'all have a good day. Peace.